This is Ross Mould of Shares Magazine for the MoneyShow.com video network, talking technical analysis with Sandy Jadeja of City Index. Sandy, welcome.
Pleasure.
Sandy, you're Chief Technical Analyst for City Index. What do you feel the investor can draw from studying charts?
Well, it's been an interesting year. There's been a lot of calls in the market that we should be heading back lower from the recent highs that we've seen. And the one thing that really has been useful has been technical analysis. Why? Well, there are two things to look for in technical analysis. Is the market trending or is it ranging? And clearly, various markets from indices to commodities and, of course, various stocks have been trending. So the one useful aspect of looking at charts is trying to find out when we start breaking support levels. So technical analysis has been absolutely useful this year, and I think that it's going to be interesting going into towards the year end and, of course, into 2011.
And so what, as a firm, do you help your investors look for? What key indicators are you really now getting people to focus on?
The simplest, by all means, is the moving average. So, for example, if you use a 20-period moving average, one way to look at it is the market trading above the 20-period moving average. Now, a really simple technique is as soon as a market that you're looking at closes above the 20-period moving average, then you could initiate a long position. And you stay in that until it closes below the 20-period moving average. That's one aspect. Other technical indicators like momentum indicators haven't really worked quite well. And what happens with that is that the markets, what they refer to as becoming overbought, is these momentum indicators will stay overbought for significant periods of times. So you have to choose your tools quite wisely.
And so in terms of, well, choosing your tools quite wisely, what assistance do you give your clients in terms of which tools they should be using?
I've always said keep it simple. I like the moving averages. Another technical indicator I like is the parabolic SAR. Again, these are trend indicators, and that keeps you on the right side of the market. One other aspect to look for is key support and resistance levels. So, for example, always look for the round numbers. As markets approach round numbers, you tend to see some reactions there. So, again, use the moving averages, parabolic SAR, moving average crossovers if you really want to get complex.
Golden crosses and death crosses,
Golden
is that right?
crosses, death crosses. What about candlesticks? I mean, that's achieved phenomenal reviews over the last decade or so. You can start looking for patterns within candlesticks, and you can look for head and shoulders patterns, triangles, wedges. There's a vast array of information out there, and one can get quite easily led to the sidetrack, shall we put it. So I'd say keep it simple, find something that works for you and stick with it.
Well, I'm obviously from a fundamental analysis background rather than a technical background. So when you're looking at a chart, do you use short-term charts, long-term charts? Because even as a fundamentals guy, I appreciate that share prices have memories. There are certain levels that just seem to really strike a chord, either as the top of a range or as the bottom. Is that right?
Yeah, absolutely. But as you said, these are human memories. Is that based on fundamental or is it based on price? And I've always followed the school of technical analysis, which is just pure price behavior. And yes, the fundamentals are absolutely useful if you're a long-term investor. If you're a short to intermediate term trader, I think technical analysis is going to win the game here. So I would say look at fundamentals. If the overall economy you feel is doing good, if the earnings reports are great, then there's all reasons to be initiating long positions in the market. But use a technical tool simply for entry and exit. Really trying to mark out the points in the sand as to where you want to get in and get out of the market.
So given this interesting distinction you draw between an investor and a trader, does technical analysis lend itself to one particular asset class more than another, like say currencies?
No. Look, let's look at currencies, commodities, indices, stocks. What do they all do? Prices. What do they all have? Open, high, low, close. Technical analysis is based on the open, high, low, close, volume and chart patterns. So for me personally, it doesn't really matter what instrument you're looking at. At the end of the day, it's price. And if price moves, you can apply mathematics, scientific, or even the artistic way of looking at the market. So it doesn't really matter what instrument you're looking at. You can be used in all aspects and all classes.
Sandy Jadeja of City Index, thank you very much for your time.
It's a pleasure being here.
This is Ross Mould of Shares Magazine, talking technicals for the MoneyShow.com video network.